Flaherty follow-up, episode 12. I'm here with Cole Woolsey. So I had his lovely wife Claire on last time, and we are in his home office. And tell us a little bit about you. And Renew Lending is your company president. Mm-hmm. Tell us how long you've been doing it, and we're going to get into what's happening in the market.
Yeah, we can talk a little bit about that. So Renew Lending is a mortgage bank. We're a banker. We're what's referred to as a delegated lender. So we have full authority to underwrite and to approve loans with HUD and with all of our investors. So when we say it's a loan, it's a loan. So it's kind of a privileged place to be.
Yeah.
And we work with our own warehouse line, so we lend essentially our own money. And we have processors and funders in-house, and everything's done under one roof.
So let's talk about that a little bit. So what would be maybe some differences if someone applied with you as opposed to a Bank of America, a Wells Fargo, or maybe even a private sector loan? Like, let's compare and contrast a little bit so people understand that.
Perfect. I don't want to disparage any other lenders, but being a direct lender and an in-house company that has full delegation, we are very communicative and things get done on time. Yeah. And we make sure that people know where they're at any given moment, and the process is very important to us, and we try to get stuff done inside a month to make sure that we hit closing timeframes. Sometimes when you deal with different brokers or these huge companies, it's a little hard to get answers out of them. Some of them are great, and some of their rates are really sharp. But if you're not closing on time, what's it matter?
Right. Yeah. If you're going to lose the loan because it's not closed,
it doesn't work, does it?
Yeah. No. Exactly. Okay. So we are in August, and there's been lots of chatter about rates falling in September. We had a big kind of fall last week in rates. Right. So let's talk about, why that's happening and just where we're at currently, and maybe kind of reasons why, and see where it's going to go.
Yeah. I think this is all derived from a weak jobs report, essentially, and shorter than expected U.S. economic data. So people are panicking a little bit, and they're running towards the bond market, and then that generally tanks the 10-year Treasury bill. And so as a result of that, you're going to see lower interest rates. So it's kind of one of those things. If you're in the real estate business and you're doing what Janelle and I do, unfortunately, it's kind of a good thing because we see the benefits to our clients, and we're going to see a little bit of rebound in potentially the residential market.
Yeah.
And the Fed's baked in maybe a couple cuts, but I think one in September for sure is what people much smarter than me are saying. But maybe 50 basis points. But once in a while, you'll see the Fed do an emergency reduction, but that may not apply here.
So I think in other words, or in other terms, kind of from my perspective, I think there's been a lot of people waiting on the fence, kind of, the 7-8% just didn't sit right with them. So dipping to the 6s, even potentially below 6. We're expecting maybe that's going to kind of rumble some things up. And what I think that's going to mean is that people that need to move, that have been kind of deciding whether we stay, in their really cost-effective mortgage rate that they've had since 2020, 21, but it's really not the house that they love or want to, or not the area that they want to be in.
Sure.
I think we're going to kind of see it loosen up, and we're going to see those homes come on the market, which is going to give us some more supply. And I can also see that, I think people waiting for more supply were looking for maybe kind of the cream puff house. And I think it's just been a little bit sparse. So I think mixed with the Phoenix market being a little bit slower in the summer, September's gonna be big for us. I think with the rate drops and kind of the inventory that people have been holding because they didn't want to put it on in the summer, I think we're in for a little bit of a wild ride in September.
I think so. I think we could easily be in the 5s.
Yeah.
Mid-5s in September. And what you want to do as a consumer is make sure that you're getting that benefit from your lender, that you're seeing the Fed where they passing that on, where the Fed has reduced rates, because a lot of times lenders can bury that back into their profitability, but we want to pass that on. And you would expect me to say that, but we know what our margins are.
Yeah.
We know what we operate on. We know what we pay our loan officers. That's all built into the rate. So these reductions in basis points should go directly to the consumer.
Okay.
So that's how we're going to do it.
That's awesome.
So, and then also there's also tricks that we play that are to the benefit of the consumer, that are when we change the loan officers' compensation.
Okay.
Loan officers are in our company are compensated well, but we can reduce their compensation a little bit and then pass that on to the consumer too. So
to kind of finish up here, let's do a couple tips and tricks for first-time home buyers, or really, I mean, anytime home buyers. We had a lot of questions, I think, as realtors on, how do I repair my credit, or what are the best ways to get the best rate.
Sure.
Even. So let's talk about that.
Credit is obviously very important.
Yeah.
And it's a silly way to determine somebody's value in a loan process, but it's what we're faced with.
Right.
So having a good credit score is important, but also having your debt and your income in line so you can qualify. We deal with a lot of first-time home buyers and a lot of FHA buyers throughout the country. We're licensed in 15 states, like I said. And FHA is up to $498,000 right now with regard to the loan amount. So there's a lot of people in the country that can still benefit from a 3.5% down loan with some mild closing costs. So it's home ownership in this country is still very affordable from that standpoint.
Yeah.
And we also have conventional financing. We do jumbo loans. So our real benefit with dealing with Renew Lending and a company like ours is the closing time frame and really getting something accomplished and knowing where you're at all times. First-time home buyers, just make sure that when we put you through the process and you're ready to go and we're about to close, Janelle knows this, don't go out and buy a new car. Don't go out and
buy furniture.
Finance all your furniture. Just chill for a little while, and then we'll get your loan funded, and then you can go off and get your beautiful household.
Make it yours.
Right.
Just
we just gotta,
after.
And it's a quick process, but we'd love to work with you. Anything that, any questions you might have, we have a loan scenario desk at our company. You can email me directly. My email is cole@renewlending.com, or you can give me a call at 775-745-6942, and I'd love to answer any of your questions.
Awesome. Awesome. Well, this was huge. Again, I just think setting the tone for what's to come, especially as this year wraps up. But yeah, you need a lender and you need a realtor to buy a house. So you got us both.
Let's go.
All right.